where we invest in and support mission-aligned seed-stage startups. WGU Labs is part of Western Governors University and supports early-stage innovation within WGU, as well as the higher ed and workforce sectors more broadly. I'm excited to be joined by an eminent group of panelists to discuss venture studios, which have emerged as an alternative to traditional venture capital models in recent years. Before we start, I'd like to introduce our panels. So first I have Terah, who is the CEO of ReUp Education, the national leader in serving the 41 million Americans with some college but no credential. Previously, she was a senior partner at the Entangled Group, an education venture studio and strategy consultancy acquired by Guild Education in 2020. Next, I have Henry Hips, who is the co-founder and CEO of Diffusion Venture Studio. Most recently, he was a senior advisor and entrepreneur in residence at Owl Ventures, the world's leading education sector venture capital firm. Prior to that, he was on the education team at the Bill and Melinda Gates Foundation, where we worked together for many years. And then finally, I have Matt Greenfield, who serves as the founder and managing partner of Rethink Education with Andre Benin. Matt co-founded Rethink First, a SaaS business focused on children with special needs, and serves on the board of numerous for-profit and nonprofit organizations, including Southern New Hampshire University. So welcome, Terah, Henry, and Matt. Thanks so much again for agreeing to be part of this panel. So before we jump in, I just want to kind of define our terms a little bit to give you a little bit overview of like what we mean by venture studios. So venture studios are organizations that create and build startups using their own resources and expertise. They typically focus on ideation, validation, and the development of business models, providing a combination of funding, infrastructure, and operational support to accelerate growth. Unlike traditional venture capital studios, venture studios are actively involved in the day-to-day management and strategic direction of these early-stage initiatives. So I meant that to be intentionally brief, but I thought before we jumped into some of the questions, did I miss anything from the panelists? Anything you would add about the defining features of a venture studio that don't get into the meat of the discussion?
I thought that was a little bit dry.
Oh.
Yeah, I mean, it always helps to give examples. So
Yeah.
some of the non-ed tech studios that have been super successful are Science Incorporated in LA, where they created Dollar Shave Club, among other companies.
Mm-hmm.
God, what is the name of the one in New York?
Alicorp?
John, I was thinking of John Borthwick's. Anyway, they created Giphy and a number of other successful startups, as well as investing as a minority investor in a number of other companies, including Tumblr. So some of these things have created enormous economic value outside of education. And within education, Entangled, where Terah used to work, and where I was an investor and collaborator, and invested in a number of the companies that they created, they exited for hundreds of millions of dollars to Guild and are still creating value with some of their other creations.
ReUp included. ReUp included.
And I'll add just one that folks I think will be familiar with. So by show of hands, how many folks are familiar with Moderna? Yeah? So Moderna was not a standalone company. Moderna came out of a venture studio in Cambridge, Massachusetts called Flagship Pioneering. It's focused on biotech. The reason it's particularly compelling is because it's an example of a piece of work that didn't start when COVID started. And even the underlying R&D wasn't pointed just toward vaccine development. So part of what the venture studio model does is allow you to bake in expertise around pattern recognition in certain places that allow you to think about starting businesses as a platform as opposed to a one-off. So as many of you know, Moderna has been wildly successful because of their COVID-19 vaccine. But Flagship Pioneering is still using mRNA in a bunch of other applications that are already launching other potential multi-billion-dollar companies. And so that's part of the power of a venture studio. It kind of combines this idea that, you can only start one company at a time as a single entrepreneurial team versus being in a very early stage kind of pre-seed investor in investing small amounts of money across a whole bunch of different things, you're kind of combining both of those ideas into a more powerful model, and that's how you get something like a Moderna.
Yeah. And it helps to have a lot of world-class managerial talent. So Alicorp, which you mentioned, is run by Kevin Ryan. And Kevin was founding CEO of, I think, Rent the Runway, MongoDB. He was, at one point, a long time ago, not the founder, but the CEO of one of the early internet advertising technology companies. He's got a long, long track record of success. So he's creating companies at quite a rapid pace.
Thank you. That's super helpful. So I think you've already touched on some of the opportunities for impact. You know, 3 areas I want to make sure we kind of touch on if we can is around this question of like opportunity for impact, which I think all 3 of you have already touched on a little bit, operational efficiency, and kind of the financial model. So I want to start with opportunity for impact. And Matt, I want to start with you if we can, because I think in our prep call, an interesting concept came up that I wasn't expecting, which was empathy. And sort of like, so can you talk a little bit about what you see from venture studios and what that means for the opportunity for impact?
Yeah, I mean, it depends on the venture studio to some extent, but I think you're all probably familiar with the idea of the accelerator, like Y Combinator or Techstars. One problem with accelerators and with early stage startups in general is that they often don't have a deep enough understanding of their customers. And so failure to find product market fit, as some people describe it, is the biggest killer of early stage companies. And another way of describing failure to find product market fit is you haven't identified a real problem, one that causes real human suffering. And the reason you haven't done that is because you don't understand your customers well enough. You don't have a deep enough empathy with them. And the best venture studios have some sort of robust customer discovery process where they don't just develop an intuition and then start a company. They run an extensive investigation of the opportunity set. And because the people in the venture studio have a job and can abandon something and move on to another idea, they don't just start a company based on an intuition. They have the chance to do a lot of robust research. And in some cases, like Entangled, they're actually consulting for real paying customers as a way of assessing an opportunity. But they're also able to abandon something without a huge amount of pain because they still have the job and they can just move on to the next project. So psychologically, it's just a healthier space to be in than an ordinary startup.
I'm going to add to that, and I think it touches on probably what you're going to ask next. I think part of the ability to have that deeper level of empathy actually works especially well within the education technology space, or at least can. I think Entangled was successful here. I think there's opportunity for even greater success in future studios. One of the challenges of the education sector is that it's a peculiar sector. Like, we have peculiar ways of buying things. We have really, really long sales cycles. This makes it really hard for any entrepreneur who wants to go to market. And go to market fast. Show some early wins. We were talking about this earlier. Talking about how to get early wins for your venture, Henry. If you have part of like the venture studio model is you have people who are building those relationships, who are getting to know companies, who are getting to know organizations, getting to know schools, looking for patterns. But in the process, they're leveraging those relationships to take these early fledgling companies to market at a much, much faster pace. If I look back about my experience at Entangled, I think that was like part of the secret sauce. Not only could we vet companies relatively quickly and abandon those that didn't work, but we also knew who to call. That empathetic exploration that we had done, like, we'd built relationships there. We say, hey, you have that thing that's a problem. We can actually build a company that can solve that for you. So the ability to take companies to market very fast is a challenge within the education sector, and one that can be mitigated somewhat by a venture studio model when it really works.
I think y'all are spot on. I want to put a finer point on one thing that is the peculiar thing in education, And it's to the point that Matt made, right? Like in any sector, you want to get to product market fit where you're solving a real problem for a customer. The challenge in the peculiarity, wow, I need some more coffee, about the education sector is that the customer who pays is often many levels away from the key stakeholder that you are trying to impact. So the level of empathy that you need is not just for understanding the problem that the person in the system is trying to solve for, which is still a very human problem. It is often several layers away from the folks that you actually want to impact and who are the ultimate stakeholders and end users who will prove out whether or not the product actually is impactful and successful. And so it requires an even deeper level of pattern recognition to first even understand that these systems have these other players and that you have to understand the distance between the actual customer and the end user and satisfy the needs of both.
Yeah, I mean, one very common problem with education accelerator companies is that they don't have a deep enough relationship with a set of customers to build the right product. So in K-12, for example, you'll often see a tech person and a former TFA teacher.
That's right.
And the TFA teacher understands the classroom, but doesn't necessarily understand the perspective of the district. There's a wonderful book by James Scott called Thinking Like a State. And here you need to think like a district, and that's very different than thinking like a teacher.
Henry, can I, one thing we talked about in our prep call is, getting back to this question of empathy and like understanding the end user. Can you talk a little bit about pathways to entrepreneurship, particularly for those that may have the lived experience of those end users we're talking about?
Yeah, so it would surprise no one if you were to look at all the data around who actually gets funded through traditional venture capital means, that it is not at all diverse. That doesn't mean that folks who are starting ed tech companies historically don't have real intention around impact, but it does often mean that they are not proximate to those end users that we were just talking about. And in any other sector, the thing that actually anchors really high quality product design that really is based on empathy is an understanding of the context of those end users. And it's harder to do when those teams are not diverse. And so when you're talking about kind of traditional VC, and I'm sitting next to someone who I deeply respect, who's actually really actively working against these patterns, you'll see that you don't have as many folks of color represented. You'll see that you don't have as many women represented. And so one of the things that is core to the venture studio model is this idea that it is not just one great man who is starting the company, right? With all due respect to all of the mythology around what entrepreneurship is, that's actually typically not how it works. And one of the things that I love about the flagship pioneering model is that this has been really clearly stated as a goal of Nubar Afeyan. Nubar Afeyan is the founder of Flagship Pioneering. He was a successful biotech entrepreneur. And everything that he does with that venture studio is around moving away from the single great man theory of entrepreneurship. And in doing so, it intentionally not just creates space for more talent to come into the early stage venture game, but it actually states as a requirement that if you're talking about building really interesting venture studios with diverse teams, that you have to have space for folks that are incredibly talented but are typically not getting shots on goal.
Yeah, there's a great taxonomy of entrepreneur types that Hustle Fund has, and I forget the names. Renata Repeater is someone who's a repeat entrepreneur and has been successful in the past and will generally have access to capital. And then there are the strivers who don't have a conventional pedigree and don't have a track record of success, who have real trouble raising money. And then there's this sort of intermediate type, which is the product manager from Stripe or Figma, who can, or OpenAI, who can raise money quite readily without necessarily having a track record of success. Hustle Fund says we focus on the strivers, the people who would not otherwise have been able to get going. And if you do the venture studio thing right, then you have relationships with seed funders, and an ability to hand off to them, and also an ability to get a level of traction that is compelling for them. And that allows you to give an opportunity to a different kind of CEO who would not necessarily be able to raise capital otherwise. And that's been important for my firm. In our third fund, 40% of our CEOs, not founders, but CEOs, I think is a harder measure to fudge, have been Black and Latino, and 45% have been women. People from underrepresented groups are an opportunity to generate alpha, right? There are talented people who are not otherwise getting backed. And that is another edge for venture studios. I mean, it raises also ethical questions because there's, the Stripe product manager who starts a company without the benefit of a venture studio has a larger ownership, isn't sharing with the studio. I've watched successful repeat entrepreneurs negotiate with some of the various venture studios that I've invested in or co-invested alongside. And it's hard for them to arrive at an arrangement because the entrepreneur says, well, I can raise money and I can come up with ideas. So I'll give you 5 or 10%, whereas the studio says, how about we take 40% and you take 40%, and then we reserve 20% for the employees, and then go from there. And they never arrive at a meeting of minds.
I think this touches on one of the biggest opportunities and the biggest challenge. Like in case in point, Entangled, far more diverse than typical companies that are like building organizations or building education companies. As a result, we had an amazing talent pipeline and really, really talented people who may not have access to capital, but in every other way were just extraordinarily talented. The challenge I think this creates, and the thing we have to call out, is on one hand, it's creating opportunity. It's creating pathways for people of color. It's creating pathways for women into this industry. Certainly it did it for me. The other thing we have to call out is that these people who are coming in and who are founding and who are building are not getting the same level of equity. They're oftentimes having to take a deep cut over what they would have founded had they founded a company themselves in order to get that pathway in. It's not to say that there is something predatory about this, but I think it's something that we have to acknowledge as we're building more venture studios. We are creating pathways, but the economics of it are such that those first pathways in, you're just not getting as big of a cut. I don't think it's problematic so long as venture studios are doing the job of then giving people those pathways into being a founder themselves and getting a bigger cut the next time around.
Yeah.
Well, you've achieved that yourself, right? You have people asking you to start something with them, or...
I have. And it gave me a pathway into private equity, which arguably is even less diverse than even venture. I think I read recently that you're statistically more likely to have the name Scott or Michael than be a private equity CEO. and female.
I think it's worth also here calling out that there is a distinction between different types of venture studio models, right? So there are some models that have EIR-driven models, entrepreneur in residence models, where a big portion of how they think about sourcing concepts is actually a very, someone who has a deep, compelling idea, that they're not even sure what the ultimate company is going to be, but they're making a bet on that individual horse, and they're going to run process and support whatever that is. And so EIR comes into the venture studio, figures out what they want to build next, and then they launch. There's a bunch of bias in that as well, because the question of who you bet on, based on past track record. Point being that if that's the side of the model, and more of the onus of coming up with the concept and building it sits on that individual team that's bringing that into the studio, by definition, they end up getting more equity. There are some models that are at the far end of the spectrum, which is it's not one individual, it is always a team. And the team itself is coming up with the concept, developing it, and then as it moves through that venture studio process, then they go find the CEO and maybe a CTO. That becomes the operating team. And in that definition, that CEO and CTO gets less equity because they weren't actually part of the conception of the idea. And there are a bunch of different kind of blends of models in between. but it's helpful context, when thinking about what portion of equity does a founder get, and it's there. there's no cookie cutter recipe for how that happens, and so to Terah's point, there's a lot of opportunity for lack of equity in the equity conversation.
Yeah. Although, when I think about the founding CEO of your company, Terah, she had a remarkable story. She grew up in an Orthodox community that really did not want her to be educated. And I can't remember when she learned to actually read and write, but it was fairly late in her formative years. Somehow made it to college, and then ended up as a teacher and then co-founding a charter school network. Not the conventional background for the founder of a tech startup. So she would not have been a CEO if left to her own devices. It was because of her relationship with Entangled that she was able to become one.
100%, and I think maybe to connect a dot that we didn't say at the beginning, ReUp Education was actually created through the Venture Studio. I was not part of the creation in the early days. I was on the consulting side, but ReUp is an example of a company that was founded and had an early founder, but I think the concept was incubated internally, and then the founder was hired.
Yeah. And the other most successful company coming out of Entangled, which I am also an investor in, is called Pathstream, also run by a woman CEO who might have been able to become a CEO a little bit later in her career, but this was an accelerant for her. And that company, don't repeat this, went from 16 to 29 million in revenue last year and was profitable. It's a monster.
This has been great. I do want to move on and talk about operational efficiencies in the model, but before we do that, we've talked a lot about the benefits. We've talked a little bit about the challenges in terms of opportunity for impact. Is there anything any of you want to add in terms of what you see as the challenges around the opportunity for impact?
As much as the Venture Studio creates like a wraparound to really help us, especially in the ed tech industry, it's still really, really hard. Getting enough ideas even coming in of companies to explore oftentimes was our biggest challenge at Entangled. One of the reasons we spent so much actually spinning up a consultancy is we were an innovation consultancy. People spent all day like talking to us about their ideas, even with that pipeline. Just simple flow of ideas, flow of companies to explore and investigate oftentimes was a significant challenge. Furthermore, I think the other challenge coming in is how do you balance wins, how do you balance revenue in those early days? Yes, ReUp, Pathstream, both companies are still moving on, still doing relatively well, but it takes a long time when you're starting from scratch to really start to see a return. So how do you get those revenue streams to keep the Venture Studio itself really humming along until you can get that first payday?
And I want to go deeper on those because I think those are big issues to talk about. So let's shift gears and talk about the operating efficiency. I want to start, Terah, we talked about kind of go-to-market and sector expertise. Can you just talk a little bit about, from your experience, what that means for a venture studio? Like how does that play out with respect to a new venture?
It plays out relatively simple. In fact, you represent WGU. I believe in the very early days of ReUp, it went something like, we've got an idea, let's call WGU. We know people over there. Hey, WGU, do you want to buy this? And they said yes. Now they have you to go through to be able to make that happen. So oftentimes it's happening that your founders, your venture studio itself has deep relationships. They understand already what the problem is of WGU or any number of other schools that they're talking to regularly, and they're calling and saying, hey, we built something that can actually solve this, or we want to even experiment and test this out with you. Sometimes it's quite that simple, but challenge for most ventures and most entrepreneurs is they're not just sitting around building relationships all day long, and they oftentimes are new and don't have that high of a level of relationship to get that type of early deal that can make or break a young company.
Henry, can you build on that? I guess I was going to ask you about again, this kind of fractional cross-functional expertise. Can you talk about that? But I think you touched on earlier that typically the beneficiary is many layers down in these large institutions, and the buying process is complicated. So can you talk about both those aspects?
Yeah, I think to follow on Terah's point, what a studio gives you is a really well-connected, if it's a good one, it's a really well-connected team that has both experience and network. So in the case of going to market, that same person who called up WGU for that company can turn around and make that same call for the next company that is adjacent to a need for WGU in any other university. And so, really what you're doing is thinking about having some part of the studio that becomes this really powerful back office platform that you can launch multiple ventures against. So what do I mean by the back office platform, right? You've got a bunch of these core things that any early venture needs, whether it's basics around HR, basics around capital raising and accounting, basics around technology, basics around product development, basics around go-to-market, right? Where some of the efficiencies come from, if you were one single entrepreneur, even if you were deeply experienced, highly unlikely you're great at all of those roles. So what are you left with if you are not already wealthy and can self-finance? You go raise pre-seed and seed money. Now, what do you do with that money? You turn around and go find the CTO if you're not a technical founder. You go turn around and find the experienced chief revenue officer or some fraction of their time before you're ready to hire a full-time person. There's natural inefficiency in that. So if you're a venture studio and you have a really dope chief technology officer that in any other context, is not going to take the risk to be involved with one single startup, but is interested in being on co-founding teams across 5 of them, now you have access to exactly the amount of expertise you need at that point in time. So that's kind of one aspect of the efficiencies. Some studios take it even further, where they try to keep the ventures really focused on their comparative advantage, right? What is it the thing that makes you special? And for a period of time, we don't even want you to start hiring finance people. We don't want you to start hiring HR folks. We're gonna actually keep that back office and allow you to buy those services at a discount. So now you're leveraging these back office supports that every new venture needs, and you're doing that and getting economies from that because you're doing that from all your different ventures that you've launched. And over time, once they really get the product market fit and take off on their own, then they can make more strategic decisions about how they want to continue to develop their own parts of those back offices.
Yeah, that's super critical because finding product market fit is very hard, and it's good to be able to concentrate on it and not to also have to worry, how do I set up a 401k or something that is outside your sphere of competency and is a huge distraction. And again, there's also this mindset thing, right? When you start a company and you raise money and you hire people, it's very hard for you to abandon that and say, this is not working. And often when people do say that, they pivot. Like the education company whose CEO, against the wishes of his co-founders and investors, decided he wasn't getting enough traction quickly enough, so he's going to become a gardening supply company.
Wait, hold on, did that happen for real?
That totally happened, yeah.
Wow.
And I think the person in question is asking for trouble. There's going to be litigation and worse, but yeah, that happened. But when you're with a studio, you have the psychological freedom of being able to say, I'm evaluating this rationally, and it looks to me as if it's not working. So I will go tell my peers, I don't think it's working. We'll discuss it, and if they agree with me, we'll shut it down. I don't then have to go through a bankruptcy. I don't have to lay people off. I don't get laid off myself. I just start looking for the next project to explore. So it allows you to make a better kind of decision.
Go ahead.
Part of what's in there too is I think for any entrepreneur, early days, finding advisors, mentors, people who can just help you answer some basic questions and navigate complex situations is really hard. What that venture studio provides as well, and what's baked into everything was just said, is that's all in-house. In fact, I think I said in our early call, like when it really works, when there's magic, venture studios combine the best of private equity, which is really, really hands-on support to make sure that it's successful, with the appetite for risk that you get in the venture world. Really good venture studios can balance that well, and it's a huge asset to have that level of expertise that is on call readily in-house.
There's another aspect to this too, from the investor's standpoint, and I've invested in 2 different education venture studios and also co-invested alongside of 3 other venture studios in education startups. And I've helped incubate a lot of companies myself, including the one that Brad mentioned, Rethink First, which now has over 110 million in ARR and is approaching unicorn status. It's in some ways a lower risk model. Once you have that first startup that is working, and if you look at the history of Entangled, it did not raise a vast amount of money, and it created a large amount of value fairly rapidly. And I was trying to explain early on to my, how do you value the intangibles, like the company creation capability? And we had a bit of an internal fight about that one when we were making our first investment in Entangled. But, there were already a couple of assets there, each of which was worth more than the total cash that had been invested. So it's oddly low risk for the venture capital space compared to investing directly in individual startups.
Matt, I get that's I think one of the things we talked about and Terah touched on earlier is that that's predicated upon generating a sufficient volume of ideas in order to kind of prime the pump and having that discipline around quickly and efficiently abandoning ideas. So I don't know if you want to follow on that or any other. I think because that's part of the magic, right? You've got to have a robust pipeline that kind of supports the economics of the studio, and you've got to have that discipline to abandon ideas quickly. So can you say more about that?
Yeah, so venture capital, as is often pointed out, is a business of outliers and exceptional monsters, things that look kind of crazy. So what you don't want is a process that is sort of management consultant-ish that zeroes you in on the things that seem plausible and are perhaps right, but consensus right, as opposed to non-consensus right. Mm-hmm. So yeah, you need to allow strange ideas to flower.
So you need to allow strange ideas to flower. How do you kill? How do you balance that against the need to sort of kill ideas quickly without investing a ton of capital?
You need to be disciplined about your testing of those ideas, right? Which most people aren't. Once they have started a company, they want it to succeed. Mm-hmm. They don't go out and ask people, am I crazy? Does this make sense? What's wrong with this idea? They just try to pitch them on the idea.
Mm-hmm. Terah, could you say, just based on your experience at Entangled, what was you talked about this earlier, but just tell us a little bit more about your experience about these issues.
So one of the ways, obviously we had generating a lot of ideas just simply from the founders of the Entangled group and the talent that we had there. But one of the key characteristics of Entangled was we had a fairly large consulting practice. Not management consulting, but innovation strategy consulting. We designed ourselves in the early days to be the whispers in the ears of university presidents, edtech CEOs, foundations. When it worked, and it worked really well, those people were regularly talking to us about their challenges and their ideas and their opportunities. In fact, all the way up until the Guild acquisition, one of our most successful repeatable products is we sold the thing that we did within Entangled. We called it oh my God, it's been years and post-COVID, I forget the name of it, like an opportunity analysis. We were selling 15 of these a year where presidents were calling us and saying, I have a big, crazy idea. Can you assess it for me? Can you validate it for me? And we made money on those things. It actually funded some of the other activities in the venture studio. And in the process, we collected a ton of information on ideas. So I think there was something really interesting about the entangled model of leveraging the right type of consultancy, strategy consultancy, innovation consultancy, to be a pipeline for that ideation. And had we not got acquired, I think there would have been some more interesting companies that would have come out in not so distant future.
Yes, single tier.
There's some ex-entangleders in the room as well.
So I can share a little bit how we think about it at Diffusion. I think some of it is a real commitment to not having to generate the single idea just within the walls of the studio. So in the case of Diffusion, my co-founder is Peter Bergman, who's a very well-regarded academic researcher. He's actually here at UT Austin. The core of what we're focusing on is this novel concept that, just like in any other sector where the federal government and universities all spend hundreds of millions of dollars every year on academic research, and then all of the other capital that goes to for-profit mission-driven ventures that are disconnected from all of that ought to actually be connected. And just like in other sectors, a bunch of compelling ideas that are really bench-level ideas. They've been validated at smaller scale. They have not been translated into anything that could possibly be considered a product or platform, let alone validated as a venture. There's a bunch of stuff that sits on the R&D side, which, left to its own devices, ends up in policy sets and lists of implementation recommendations that never actually get to the impact that's intended, right? And so in our case, we're making this real commitment to not only look at all of the types of IP, compelling data sets, and talent that are all working on challenges in the education sector, but don't have any real orientation about how to turn those into real solutions. And then looking at all the folks that are looking at market opportunities and know how to actually identify them and bring things to market, and we're weaving that together in our process. And so what that does is it keeps us from having to source every single initial idea all the time. We're actually able to do a bunch of pattern recognition across interesting ideas that are really just sets of features, but that are deeply validated, and with the right team can actually be turned into something compelling.
I want to tell some stories about your co-founder, Peter Bergman, whom I've known since 2013. So back in 2013, he ended up running a randomized controlled trial. He's an econometrician by training with a company of mine called Ngrade. And basically, he was text messaging parents when students failed to turn in an assignment on time. The students hated it. They called it getting Petered. But the effect size was high. He published a peer-reviewed randomized controlled trial paper about it, and that's been a big
It was his dissertation, I believe.
What?
I think it was his dissertation, wasn't it? There was some of the initial work was based on some of his dissertation work, I thought. But I could be wrong.
I'm not sure about that, but it definitely resulted in at least one randomized controlled trial that appeared in a peer-reviewed publication. And that's been a huge thesis for my firm ever since. We have another 4 firms, one in K-12, 2 in higher ed, and depending on how you count, at least one, but looked at another way, at least 4 in the workforce area that use text messaging and nudging and behavioral AI to change people's behavior. And then Peter worked with one of the entrepreneurs from that company to build a code base to do that kind of nudging, which was then bought by another company in our portfolio and became very central to their business. That business has tens of millions in revenue and is extremely profitable and is preventing millions of kids from being truant or dropping out, and has a radically expanded new vision now. So yeah, he's been really making things happen in the startup space in a way that very few academics have in the education space.
Yeah. And in that example, if the studio had been around and we had that level of expertise and were really clear-eyed about what the market opportunity, like nudges through text-based messaging would have been the platform, like mRNA.
Yeah.
And then you could actually, from understanding that, apply that to a bunch of different contexts and create a lot of value.
we've been involved in a lot of activity that was kind of venture studio-like, except that nobody got paid. Or at least didn't get paid the big money. And Peter is an example of that.
We're going to change that.
I want to kind of shift gears to talk about the financial model, but before I do, I think we've talked about the go-to-market support, but I wonder if one of you wants to talk a little bit more about, given the challenges in education of being like B2B and B2G and sort of like dealing with school districts and higher ed institutions and how challenging that is for a traditional seed stage startup, and what the affordances are of a venture studio.
You got to know all those folks. Like straight up, like if you're gonna be in a studio space, you have to have relationships with the downstream investors and understand what they're investing in, because at the end of the day, once you fully run your process, the entire intention is to have a team that runs it, an operating team that runs it full time, and to actually get it to a formal seed round, if not beyond, and then step back. And if you don't know those folks, you don't have relationships, you don't know what they're investing in, then you can't do that. But likewise, if you don't actually know, you said this on our prep call, like if you're trying to do some work in LA and you don't know Superintendent Carvalho or somebody who's close to him, then if your whole approach to LA is my cousin is a teacher, you're not close enough. And so you have to be able to have relationships with all of those folks and be credible, and not just credible, but actually be able to pull in the kind of talent that can execute against all of those things. And that's really, really hard to do as a single entrepreneur. But you can do that as a studio.
Thank you. So just quick, we've got about 16 minutes left, so we want to make sure we leave some time for questions for the audience. I think the one thing about the financial model, Matt, if I could tee this up for you, is I think there isn't an additional actor in the financial equation, which you all of you have hinted at along the way. You've got the studio in addition to the investor and the founder. Can you talk a little bit about that from an investing standpoint, what that means?
Well, when Paul Friedman, whom I'd known for a long time, was starting Entangled, he came to me and asked if I'd like to invest. And I, in a very costly mistake, said, why don't you bring me one great company instead of promising to create multiple great companies? So I came back and invested at around 6 times the evaluation a little bit later. But if you do it right, it is not very capital intensive, right? You're talking about $1 million or $2 a year to pay the salaries of the people involved, depending on how big it is, and then $500,000 or $1 million to get a company to at least the pre-seed stage. So for $10 million, you can have a number of shots on goal, and only one of them has to go right to pay back a multiple of that. So that's the way the economics work if things are going well. Now, there are a lot of people who start studios. Actually, the most common killer of studios is the failure to raise that $10 million. But also, if your first 2 companies aren't at all interesting and don't go on to raise additional capital or get traction, then you may not be able to take the 3rd and 4th shots on goal.
Other thoughts about that, or So I think maybe just kind of going forward, we've had a really good discussion. I'll just kind of leave it open-ended, give you each an opportunity to sort of what's the long-term trend for venture studios, where you see things going. And because ChatGPT helped me kind of synthesize our notes from the last meeting and insisted, I asked, what do you think the implications of generative AI are?
Such a cop-out for ChatGPT. It's like when I was a consultant, when you didn't have any other question, you asked, what would the board think about this, when you were completely not paying attention in the meeting? Look, I'm going to connect some of the things that are happening in generative AI to the venture studio. I'm still very excited about the model. And I was super excited about the exit to Guild, but as you maybe sensed from me earlier, I was also a little sad to see Entangled go, because I think it was doing really amazing work, and I'm excited to see others picking up the mantle and taking it forward. I do think some of the things that are happening in generative AI could help speed some of the investigation of the early ideas, and even help with some of that early pipeline. In one of our pre-conversations, Matt, you mentioned really, to get a venture studio off the ground early on, you still need that one person who's just got lots of ideas. Maybe that like threshold for still needing the person with lots and lots of ideas can go down at least a little bit with the ability of generative AI. And maybe the cost of investigating some of these early concepts can actually be reduced a little bit too with some of the impact of generative AI. So I think it's still a very exciting space, and I'm very bullish on it working in the education market because of all the things we talked about before.
In the e-commerce space, for example, and possibly also social media, I could see OpenAI spawning its own purely robotic startups. They might, I don't know if any of you know the novels that started with Daimon by Daniel Suarez. You might end up with a sort of semi-malignant AI hiring humans. So you have a hybrid organization, but they could iterate very rapidly and try things that a human would never think of, and create autonomous e-commerce businesses, and then have things manufactured to suit as they start to get actual orders. It's a little bit scary. I don't see that happening in education right now. When I see robo-tutors explaining things, they explain in a very bland and uncompelling way. So we're some distance away from having real competition for humans.
I mean, what do you see as like, I mean, what do you see as the future of venture studios, Matt? I mean, you talked a little bit in our prep call about, you know, in some ways you can replicate the function of a venture studio in other ways, like through a fund. I mean, are you bullish, bearish?
Well, we're doing a lot of it ourselves. I mean, depending on how you count, we have 4 incubations going in just our third fund alone. One is a former employee of Rethink Education. One is someone who was looking for CFO or COO jobs, and I said, have you ever thought about being a CEO? And I gave her the initial idea, but I didn't really do very much beside that. So it takes different forms, but it's something that good venture firms have always done. You know, Kleiner Perkins created Genentech, and I believe also Tandem Computer and several other businesses with Brooke Byers of Kleiner Perkins was CEO of, I think, at least 3 different biotech companies in their portfolio. So it's kind of a blurry line. Yeah, it's a good way of organizing creativity, you know, creating a safe space for an entrepreneur to conduct an experiment without catastrophic consequences for failing.
Yeah, I would not have started one if I didn't think it was the right way to go. I'm very bullish, and some of that is because I think, you know, necessity is the mother of invention. So there's a reason Matt and his team are doing more launching companies where they may not have before, and there's a reason why we have a dearth of accelerators in space. 8 years ago, you had an ed tech focused accelerator around every corner. There were a ton of them, and so we should ask, why did they proliferate, and why are most of them now gone? Some of it is because ed tech and education, it's really, really difficult. Really difficult. And therefore, you have to have some kind of way to aggregate the talent that you need to be able to do the kind of pattern recognition and have the execution expertise to be able to do it more repeatably. And that is exactly what a venture studio was designed for.
Well, a lot of those accelerators are run by people who didn't have any track record of success as entrepreneurs, which was a little bit weird, you know, to ask people for 6% of your equity in exchange for advice from someone without, you know, compelling qualifications. But also, somehow the accelerator space has been a little bit more of a winner-take-all thing. I mean, Techstars has now produced a number of unicorns, but for a long time they hadn't produced any. And there are actually a few like Mucker labs that are less prominent that have achieved pretty decent financial results, but really Y Combinator sucked all the oxygen out of the room. It was the play, you know, it had the signal to investors, and so it was where the talent wanted to be.
Thank you. So we've got, I think, around 8 minutes if folks have questions. I don't know, I think we have microphone set up. Go ahead. Would you mind standing up just so folks can hear you? Go ahead. Yep, you.
Hi, my name's Carl. I've just exited a business successfully. The question for me is there going to be a new focus on what the return on investment should be? So the idea that we're still talking about unicorns, has that kind of reversed?
Hello? Do you want me to repeat the question, or?
Matt, you want to repeat?
Oh, yeah,
Sorry, that's the first question. And the second one is, in a world where everyone's remote, how do the labs work in terms of with Entangled? When I visited there, everybody was in the same office. What's happening in the new world of being able to sort of congregate in places, either geographically or whatever, and if there's any way of doing it remotely? My preference would be to be in an office, but new realities are in place.
Well, a flat world is great for recruiting awesome talent. So, and you know, the best talent wants to work remotely, a lot of it. With respect to the question about ROI, you know, I'm glad you brought that up. So we've mostly been talking about K-12, even though Henry also does workforce, and Entangled was not very interested in K-12, was mostly higher ed and workforce. K-12 can offer some fairly large opportunities, but that's not the way to bet, right? So you need to have investors who are prepared to be delighted by a company getting to 25 million in revenue and then exiting to a PE-backed platform, right? Which means you can't go out and raise money at 125 pre. You can't raise $50 million, or nobody will be happy. That's true for K-12 especially.
Yeah, one of the descriptions of what's necessary in ed tech, but also specifically K-12, was shared by Michael Horn, who was a senior member of the team at Entangled as well. And he rightfully said, like, look, for K-12 in particular, the VC game is a home run ball hitting game. But a lot of what can work in K-12 and ed tech writ large is a machine that hits a ton of doubles. And so some of it depends on exactly what the returns expectations are. But if you set the expectations appropriately, and because you can hit a lot of doubles without investing too much, as long as you're clear on what the expected trajectory and exits are, that should be sufficient. If you catch those home runs and you can return the whole investment in one shot, fantastic. But there's a way to get to the ROI by hitting doubles and some triples. The other part that I would say as well, on the question of recruiting talent, like this is also part and parcel of the challenge with having a diverse talent pool. And so, like, not particularly diverse in San Francisco in the kind of ways that you would want for these particular markets that we're talking about. It becomes a whole lot more interesting when you can actually hire folks from different places, and the kinds of things that we're talking about doing are not brand new. There are folks like High Alpha, which is a B2B SaaS-focused venture studio based in Indianapolis, and they have specific times a year. They run very intentional sprints where they bring folks together and capture what they need to capture in person, and then have some flexibility and ability to operate independently. I think that's the best way to think about getting the best of both worlds.
I totally forgot about High Alpha. We co-invest with them as well. Company called Lessonly.
Oh yeah.
Yeah.
Terah, is there anything you would add?
I wouldn't. I think they said everything in terms of the ROI, but I would echo that I think the remote world is just going to make venture studios easier. In fact, in the final year of Entangled, increasingly a large population, we had remote. We can find more talent, we can find better talent, and in some ways it might actually bring the cost of operating the venture studio down. We had amazing talent in Entangled, mostly centered in San Francisco, and that drove up the cost of every single venture that we looked at. But when you can distribute that around the country, and when people actually know how to work remote, you can actually find better talent, you can find cheaper talent, which may allow you to take more shots than you would have in a pre-COVID world.
I have one startup that has Google quality talent working in Pakistan. They start at $11,000 and go up to $30,000 a year. One of them told the company that he needed to move to the Emirates or he couldn't get married. That was something his in-laws insisted on. and they had to triple his wages, but that's still, a lot cheaper than San Francisco. Yeah, and there's a lot of talent out there. Finding great talent is critical to the success of startups. And I will add that the talent all is looking for startups that have social missions, right? If there are two companies that are financially equal and one of them has a strong social mission, that company will win the war for talent.
Thanks. I think we have time for one more question.
I have a question. As a founder of a tech startup that's trying to gamify high school education using AI, it's not entirely clear how to evaluate when the product market fit happened, because kids are happy, but I'm not sure whether they will convert at a later stage. So what are the early markers for understanding whether it's a good direction or not?
So, yeah, the question was, he has a startup that is focused on gamifying the high school experience using AI. He doesn't yet have paying customers. What are the early markers of success? Well, one marker that is very important to my firm, both from a social impact and a financial standpoint, is simply engagement. Like, direct consumer businesses are kind of terrifying because you often lose 75% of your users after their first use of the product. I don't know how to invest in something like that, right? But we have one direct consumer business focused on senior citizens that has 4 million monthly uniques, right? That's a compelling level of engagement. So either it has to be viral or it better be very intense engagement from that smaller number of users.
Without knowing how you're thinking about your go-to-market, the one thing I'd add is if you are planning on a B2B play and the ultimate customer is going to be someone sitting up in the district level, even if you don't have paid pilots right now, actually having confirmation from some of those senior leaders who are bought in and are supporting the pilots in their places is critical. One, because even if they're not spending green external dollars with you, there is some opportunity cost with them trying out a new tool, like spending some of their own internal resources to make sure folks have time to use it and so on. That's a pretty good, you get enough of those, that's an indicator that you're on to something with the ultimate customers that are sitting within the district.
Yeah, universities and K-12 school districts are both very fatigued with innovation and point solutions right now.
That's right. So if you get some traction with them, that means something.
All righty, well, I think we're at time. Thanks again to the panel. I really appreciate it. And thanks to the audience.